Hello traders, good morning. Welcome again to the live advanced bookmap webinar. Today we're joined by Scott Pulcini, a professional futures trader. We do this every Thursday at 10 a.m. Eastern Time. It forms part of our education here at Bookmap. Usually Bruce, our lead bookmap educator, hosts these, but he's away this week, so my name's Sam. I'll be helping Scott today. Bruce should be back with us next week. Before we jump into the live analysis with Scott, there's just a couple of things to run through. You can find out more about Scott on his website, scottpulcinitrader.com. You can also connect with him on Twitter at scottpulcinitr1. And the disclosures here. All Bookmap Ltd materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation demo paper trading mode and is strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, Scott, are you there, sir?
You hear me?
Yes, I hear you.
Yes, I am here. Alrighty, you have my screen?
Just give me a second. Okay, you're good to go, thank you.
Alrighty. Well, watching these equities here, I wanted to potentially buy down here in this 4,000 area, and there's just has not been one signal today, volume-wise, for what I look at for this whole move down. And then today, so down here, we had a bunch of these spot gamma levels as well, and I'm just not seeing anything. I don't know if anyone else is getting signals. If it's my computer, it's kind of weird to see these types of moves without anything. I mean, there was a small stop run up here. I'm getting alerts in other markets, but I haven't got anything in equities. So I'm currently long gold. We'll go over this here in a little bit, but as you can see here, there was quite a bit of sell ice here earlier. You had 192, another 150-ish, another 210. There was a stop run in here, and I was going to actually short this market. And we came back, and I was waiting for, we were above the yellow lug. We'll go over all this in a second. Let me find my...
We're seeing some NR TV here at Algeria signed a deal with Niger and Nigeria.
So we were above the yellow lug. I'll show you that here in a second, but I was waiting for our ATR retest failure of this blue zone. Never happened. We got the ATR, and then I had my order in to sell it, and it never got down here. I ripped through it. Then we had more stop runs. That's this yellow zone. And we're above the yellow lug, and my rules are to go long aggressively outside of the setup, just outside an ATR. I actually missed that, and then it came back, and I got in here, which I should have been in originally, and then it did actually come back and retest this zone perfectly, and now it's back to an ATR above there. So, structure-wise, there's not a lot here. I can see this. This was an area where this did pause here a little bit overnight. can see here overnight, tried to break out, retested this high volume node and launching. There's just really nothing here structure-wise, so I can see this getting up to 1800 today possibly. There was some good volume in here as well. I've been kind of laying off gold lately. It's just been very hard, gold and crude, since the Ukraine war started. But again, there's not a lot there as far as structure. And then you can see here there's some good volume here. So I'm willing to give this a shot that this thing can roll today. You can see here, 2 to 3 times volume. Just had another spike of volume on this move down back up, so I could see that happening. And again, I come up with my thesis based on the structure, lugs, and then relative volume, and then I wait for real-time volume signals to help me enter the trades, control my risks, etc. So you can see here. So these are the Ludwig levels that I
CL,
use.
stock sell CL, 168 contracts.
Take a look at CL here. But the first setup was above this lug over here. That's why I was waiting for a retest failure. Actually, let's see the exact price here. That was basically 63 up to 60, close to 67. Which was, actually we were bouncing around the yellow lug. That's why I was waiting for a retest failure. And we moved down below that first zone and then came back and went right through it. So now I wanted to be aggressive because we were above the yellow lug. So my target hopefully is up here near this red lug, and I do think we can get up to 1800 based on the volume and the relative volume and the structure stuff that we just talked about. So actually I'm going to merge these here. As you can hear, very quiet in the equities today. I'm not sure why I'm not hearing anything. So yes, here this is a zone that I was interested in buying. I had this drawn from this day here. We had directional conviction straight down here. Was about a about a 40, about a 60-point move straight down. So this was an important area to watch, and you can see yesterday after the Fed came out, we ripped right through it. So many times when you rip through important zones, that's telling you something first and foremost, and then which should have been resistance is now support. So I will happily buy in here. I want, if this turns out and rips down back through here, then I'll watch where this whole move started yesterday, and if that can't hold, then it's probably going to get ugly. So the last 2 Fed days, I've seen this in a couple different publications.
Iceberg by HT, 151 contracts.
The last 2 Fed days, we've given back all the gains from the prior day. So you can see here, this is the May FOMC, we were up 3%. The very next day gave back 3.5%. June FOMC, we were up 1.5%, gave back double that the next day. Yesterday we were up 2.6%. That's why it's got a question mark here. So, overall, this market, these equity markets are still long-term bearish, I would say. Intermediate term, they're bullish, but this is still, see here, this is still in a downtrend, right? So, and that's why, if you guys remember the last however many years when we were in an uptrend, every down move was met with this. Now, since we're in a downtrend, every up move is met with that. So, I'll still play the long side here, but if this starts to violate these important areas I just talked about, then this is probably coming back down here. And you can see this balance area, multi-week balance area, is very important. So we had balance here, launched here. This should have been, current structure. We're talking about these days where this should have at least pulled back down to here. It held into doing that. So this is intermediate short-term bullish. So that's why this should hold. If this doesn't hold, this is last stand. If that doesn't hold, then we're coming back down into this guy. But getting ahead of myself here. I will play the long side, and again, I'm just waiting for some kind of signal. It's very strange. There hasn't been one setup in any of these equity markets this morning, especially the day after a Fed. That's when the big money, the big funds, banks, that's when they usually play the day after the Fed. So I'm very surprised not to see anything in here as far as my thresholds. So you remember, I have certain thresholds for each market that I know that I want to see. I don't just play every spike. That's an error that people have when they get this SI indicator. They're playing every spike on this thing thinking it's relevant, right? So I'm looking for relevant volume that I know is a market moving volume event. So in SNES, it's 500 iceberg or 500 stop runs, 700 icebergs. If I don't see that, I don't trade it. Yeah, it can move around and I may miss some moves, but this is just when you're not seeing any setups and relative volume is pretty low. It's just algos. So if you want to try to guess what the algos are doing, good luck. Overall, you're going to have a very, very hard time. That's why I look for the volume event, because the volume event is what disrupts the algos. So when the algos are disrupted, that's when you get more, true trade per se, because these algos are, run over by the big money. But there's just been nothing in here today. So see nothing in here, nothing in NASDAQ. A little bit of actually this one can work on this could draw this, especially a day like today. So this is 150. It was right at my threshold, so I will draw this, get some kind of trade. And so you see when you're drawing your zones, make sure you incorporate all the price bubbles in this price spike. Use your little crosshair guy here. So that started basically here, and you can see this black line, this icebergs on chart that's just showing you it's one house, one entity that came in here with this iceberg. You can see the execution of 150 here, and then you see it down here. I get questions all the time. Do I trade off of the chart icebergs? I rely on the sub chart, because many times you have to be very careful using.
For nice iceberg sells EC 412 contracts.
What's that? I heard corn, but I don't know what alert it is. I haven't set an alert for a couple of weeks here. Hold on a second. See if I can figure this out. We'll come back to this. No idea. All right. So anyway, you want to be careful, because many times, you see how this was basically condensed in this area. But many times, if it's one house, you'll see. So say we're talking sell ice, right? And you see these blue bubbles that keep running into the sell ice, but it could be. It can come up here, transact. I don't know why it's not showing the transact. I might have it turned off. Let's check here real quick. It should be showing me the actual trades, maybe all one at one time. But many times, so say an entity has 500 sell ice that they want to sell, right? So the market comes up, it touches it. There's like 80 here, right? And then it comes back later, and say the entity moves it up here, and then they're still not done, and then there's 100, and then the entity moves it up a little further, and now there's 200. Well, you don't have to draw your zone incorporating all of that. You want the area that's the most concentrated volume that is over threshold for whatever market. Again, I have certain thresholds for each market. So that's why I don't use this per se. I'll keep an eye on this to help me draw my zones. But if I see, so say this is executed 500, but it went from, like I said, there was 80, 100, 200, and it stretched like 100 points. Well, I'm not going to draw the zone 100 points. I don't need to. I'm looking for concentrated volume events. That's the whole idea behind this. So this one actually fell within the parameters, so that's why I drew it. But just be careful using this only. I have some traders in my room that have been using, they're not seeing anything here and they're seeing on here and they're drawing zones. You just got to be very careful, because that's not a concentrated event. You want a concentrated event because that signifies loaded up traders. Either way, either the entity that's taking the trade passively, right, or responsively. They call them responsive. This would be a responsive seller, meaning that they have the passive orders in the order book. Actually, the icebergs are not even in the order book, but they're not being aggressive, right? The aggressive buyers are running into this. So the point is, the volume event is what is important. The area is what is important. You just got to make sure it's concentrated at least with threshold, because then that's when you get the bigger move away from here, as a puke type of move, right? Guys that are wrong have to get out. All right, so let's see here. ATR right now, 5-minute ATR is what I use to judge these zones. If the market can get away from these areas, that's how I judge what. I have 6 distinct setups that I trade off of these volume setups. You can see the ATR is 34 points, 33.84. So top of this zone was right around 86, and this got up to 03. So I got 17 points above here. So I don't know what this setup is yet. So this could either be a Titanic setup where the market moves into the sell ice, the buying, and fails, or it could be broken ice. Broken ice is when the big house or the entity takes a stand and gets run over, and that looks like what's happening here. So we're getting close to an ATR. So if we get an ATR here, I will play retest failure of this zone, and I'll go long. So again, that was 85. So we need to see what I see ATR was 34.4. So 35 points above here puts me at what's that? 21 quarter. So I need to see 21 quarter to be a full ATR above here to know what this zone is and to trade off of it. So I did this kind of backwards. I usually know exactly where we are in these, in the bigger picture stuff to know if this is a really good area to trade or not. So you can see here we almost made it back into this directional conviction move yesterday from the Fed. So this is an A plus area to be trading. This is an A plus area to be trading to look for a bounce, and or if it rips through it, that is great information as well, right? This area is really important for the day trader right now. So if we move a little lower, I will watch for another setup in here. But again, the real-time volume is possibly giving us a setup here. So I said we had to get to 21. But that didn't quite get there yet. I'll still take this trade, but it's not an A plus area as far as I'm concerned. So that's the one thing I look at, and then the other thing.
Soybean iceberg sells ES 201 contracts.
I'll go to soybeans here in a second. I actually have a position in there as well. 1 second. Just want to see what we're looking at. Gold just being gold. Whipsaw City as usual. That's why I've tried not to trade it lately. It's just every move just gets batted down. So, my rules are below the yellow lug, I will go short aggressively on my setups, meaning aggressively just once it gets an ATR out of there, I will enter the trade. This is a different story. One, I know we're coming into that important zone I just showed where the directional conviction started yesterday, and we have blue lug, and these blue and red lugs are very strong support and resistance that I don't mess with most times, right? Meaning I won't go short right in front of a blue lug because I know how many times the market will bounce us off these areas, especially when you're at extreme standard deviation of VWAP, right? So I would not go short here. So say this zone holds and it turns into a bearish setup, I will not go short unless I see really high relative volume coming in that in my mind is enough to push through this blue lug, right? So I will take a long right here, but I will not take a short until we can bust through that blue lug. You see how we still never got an ATR above here. So what I was trying to say is below the yellow lug, I will usually take the short off of this volume event just outside an ATR. This one I'm not doing it because the blue lug is right here, right? So I'll wait for it to bust through, make new lugs. And again, I'm not real excited about going short yet until this thing can violate this zone. If I can find the market. Hold on here. Do this every time. So there's certain instances where you just don't want to mess with it, right? I mean, you can trade these volume setups in a vacuum without even looking at charts. I proved that last December. I traded for my trade room. I traded the entire month just trading the volume setups in a vacuum without even looking at charts, right? But there's going to be certain times where you're like, you know what? Say you get a bearish setup right above here. Well, do you want to be going short right where this started? No. Once it gets through here, then you can be looking for shorts. So my point is, there's the blue lug is right here, and I know this zone is really important. I will not be going short until we can get through here, draw new lugs, and then I'll happily go short. So right now I'm just basically looking for longs. If we get in here and I get a long signal at the blue lug, I will definitely take a long. And I'll be aggressive long at the blue lug. So that's just a little lower. Blue lugs at 12,434. Again, they're called Ludwig. I call them lugs because I don't want to say Ludwig level 500 times in a day. So we call them lugs. LudwigLevels.com. Go on there. It's got a 3 free day trial. Say you saw it in the Bookmap webinar. And she's got special pricing for you guys, and as far as you can get more products than normal, so on and so forth. And she usually offers, but that's what I use to help me with my day trading and help me with my directional conviction. I use them for support and resistance, but there's other ways you can use these as well. I've done a webinar with her. Most of you guys know all this stuff, but I always gotta pretend that there's just brand new traders on here because there is. But when you draw new lugs, you can come up with a thesis on the way these are drawn, when these draw new lugs and how the market responds to them. And for instance, this drew new lugs. It should hold prior red directional yellow and then get up here. Well, if it breaks back down below the yellow, something's up, and then you expect blue, and that looks like that's exactly what's going to happen. So again, I'm just brushing over this. You can watch the webinar. I posted it many times. If you guys don't have it, you just send me an email and I can share it with you. It's a webinar I did with her that she explains like a lot of this, the thesis stuff behind the lugs, just besides the basic support and resistance. So basically I'm waiting for either an ATR retest failure of this zone, or I will be looking to buy down at that blue lug. This trade is horrendous. It's been horrendous. I was on vacation for a week. I come back and it's been pretty bad last few days. So see that's there. Still waiting for any kind of setup in ES. Nothing going in there. Soybeans, I'm currently long. I was long overnight. I got out and then I got back in. I really wish I knew where that alert was coming from. I can't find it. Let's see here. We will draw this in corn though. I don't trade corn a ton. I've been trading it more. It's been actually moving around because usually it's like watching paint dry, right? But you can see here. So my threshold was 300 in corn. I've moved it up to 400. I just don't want to pay attention unless I see some major volume, but this is decent. This is good volume, right? You get 466 cell ice here, another 245 here. So that's over 700 cell ice. And you can see on the chart here, this is the benefit of the SIN chart as well. You can see this is one entity basically coming in here, at least for this first spike here. So I'm going to draw that. This literally will drive me. I cannot find where that alert is. No idea. Hold on. Let's check these markets here. There's no way I can listen to that for the next hour. Sorry, guys. Any questions while I'm trying to find this?
Nothing yet. It sounds like the ice cream vans are about to arrive.
Yeah, it's great. It's great to listen to 5,000 times, and it's not show. Usually, it flashes on the window that it's firing off on, and I cannot find it.
I suppose that the lesson so far here is demonstrating patience, the importance of waiting for your setup. We obviously stream for 1 or 2 hours, and if nothing presents itself in that time, you don't want to be forcing anything. You just got to stick to your plan, be disciplined, and accept it's often a kind of boring waiting game.
Right. Part of trading is not trading, right? And I know guys are, wanting to jump in, like they see these moves and they want to see it. So I had someone in my trade room. It was a couple months ago. He's not in there anymore. Not surprising. I booted him, but he was complaining one afternoon it was just completely dead. Relative volume was horrible. And I'm like, guys, I'm not gonna trade in this environment, right? I'm not gonna risk my capital in this environment. And he got on and chimed in. Well, there was just a 50-point move, and you should be trading and doing webinar, blah blah blah. It's like if what my parameters to trade are not there, I don't trade, right? I mean, this thing can move 100 points. If I don't get what I want to see, you're just playing with the algos and hoping you don't get whipsawed by algos. That's not what I look for. And if I don't get it, I don't get it, right? So right now there's nothing happening. I'm not trading this market. I mean, most traders can't be that patient, and that's why most traders lose. If you can sit here like a sniper, we talk about every week, and wait for your shot, you'll make it as a trader. If you are, forcing trades just because you're trying to catch every move in the market, it's not going to happen, right? You will be algoed out of the game. Algos are 85% or more of the trade, and they are designed to just whipsaw you out of your money. And I don't trade unless I see something. This thing could, like I said, could move 100 points. It really sucks on days where I think I'm expecting something to happen, and I see it and it happens, and I didn't get a setup, and that's just the way it is. Most days, 95% of the time, I get my setups. Just it could also be telling you something. There's nothing behind this move to here as well. So that could be a signal. So if this thing holds and starts moving higher, then you start getting bullish setups. Well, on this move down, there was nothing. So then you turn around and you start getting actual setups. That's information as well. So again, this market is in an area where this better hold or it's going to get ugly. So I'm just waiting. See here. This was this area we talked about. This was this sell-off in ES. And we ripped right through it. So this should hold. If this breaks, this is last stand down here right around 39.80 to 39.70. If that breaks, we're going to have another day where we get back the entire move and then some in these equities. And you can see I'm still watching this area. So for this zone, we never got the ATR above here, so I'm not playing this, and I'm not playing it to the downside aggressively. So basically what this looks like it's going to happen is it's going to come down to that blue lug down here at right around 35. And if I get a signal, I will be going long aggressively. But like I said, if it breaks that area, then we just talked about, it's not going to be pretty. Come back to corner in a second. I just want to check this position. So this is just doing nothing. I'll go over this here in a second as well. Just trying to find there we go. So this is an extremely important area, and we're about to hit it. So I will play for that. If it gets through here, then bye-bye. Bye-bye, NQ. So just sit here and wait. Alright, so soybeans, again, I was long overnight, got out, and then right at the open here, you can see the stop run came in. This was a stop and hold. We had 255 stop runs. And again, stop runs are not real, and well, not all the time, but most of the times they're not real initiative buying or selling, right? It's just most of the time it's the retail trader puke. But so I have two different distinct setups with these stop runs. It's either a dumb and dumber where you get the retail trader puke. Well, sorry about that. I don't know what that was. And then there's no real buying behind it, and then it just fails, right? That's a dumb and dumber. Well, this one turned out to be a stop and hold. And I judged that by it was able to get an ATR. At the time, the ATR was like 3 cents. It was able to get an ATR above here immediately. So this fired off. You actually had some sell ice too. It was right at threshold, real close. So this was potentially a double whammy. I didn't draw this up to here because I like to see closer to 200 for my threshold in soybeans. So I just drew this stop zone. So I got in. It actually had a move, came back, tested the zone, and moved back out and a little over an ATR. That's where I got long. And it actually looked like it was going to be a nice trade, and it's coming back. But I still think this thing is going to rip. Another thing you can use when you're coming up with your thesis for the day, right? Obviously, I'm looking for setups, but you can see where this liquidity is above. So this liquidity is just resting orders in the order book, extreme orders, and the market will make it there eventually because these are the big players, and the big players get what they want. So they will get loaded up down here long, and then they'll push it right into their orders. And the reason I know that, because that's the game I used to play all day, every day when I was a scalper. I would put, 1,000, again, this was ES, but to illustrate, I talk about this all the time as well, but and then I would start accumulating down here, and then I would wait, and I'd buy some more and see if there's any sellers. Anyone pushing it against me? No. And then as it came closer to my orders, I would just start to buy like crazy. I'd have guys jump on my coattails. They see the flurry of action here, and they would jump on my coattails, and it would push it right into my waiting offers, and I'd be out of the trade. So that's exactly what happens to this day. It's all one big game. If you can understand the game, then you can play it, right? We talk about all the time. Guys have been complaining, even I used to complain too about, when I got knocked out of the game as a scalper by the algos, I would just say all day long, this is manipulated, you can't make money, blah, blah, blah. It is 100% manipulated, but that is the benefit of having Bookmap. This is the biggest edge you can possibly have, because if you can't beat them, join them. You can see what they're doing, what they're trying to do. And then, so for instance, this comes up here, and all of a sudden you start seeing buy ice. It's like, okay, now it's got go time. They're loading up, and we're going to run right into this liquidity. So the first thing you should do every morning is pull up your book map, condense it, and see where all the liquidity is. That's the number one thing to get a good idea. Again, a very, very high percentage of the time, almost every time, it will come up and hit at least the first row of liquidity. All right, so that is really important. And when you're looking at your traditional stuff, for instance, this, we'll look at this in the bigger picture. This is looking very bullish too. So when you get this stuff, what I see here is one major balance area, right? Consolidation, whatever you guys want to call it, right? All it is back and forth trade, and it's just traders getting loaded up, placing bets, right? And whoever's wrong has to puke. So you can see we're breaking out of this multi-week balance. So that's bullish. We had balance last couple days, breaking out of that. So you had balance on top of balance. This is a bullish market. You want to watch this area here, and it's like this is kind of struggling with this gap down this day. I should have a zone drawn right here, actually. I'll draw that right now. So these zones, I get questions all the time, what are your zones? The zones are based on the 4 important areas of charting, right? So it's tops and bottoms of balance areas, which I show you this real quick before we just talked about this. Tops and bottoms of balance areas, high volume nodes of HV, or we call them HVNs. That's just the middle of a balance area where the most trade occurs usually, right? That would make sense. Back and forth, it's usually in the middle. So it's tops and bottoms, high volume nodes, and then buying and selling tails, so this is really important, and directional conviction. So that's where I draw my zones. I don't usually draw the high volume nodes because it's just something you can eyeball. And it is an area, it's not an exact price, but when you get direction like this is a really important zone. This is the area that this market moved down over a full dollar, and then ended up, this entire move down, that this is what initiated this whole move down, and we've never retested, right? That's an important area. Another area I need to draw is this selling tail. A tail is just instant rejection. So you want to draw that as a zone. And then, so what I was saying is I didn't draw this. This was direction gaps. So this is a regular trading hours chart. Gaps are directional conviction, right? So you can see this market closed right here on this candle this day. Got a little bit of a tail there. So I'm just going to make this one zone. So this is an important zone. If this thing gets rolling up here, I will watch this to get out of some, right? So these are what I use for targets as well. So I know that's a pretty important zone. This one you can draw. This is a pretty big zone here if you incorporate this entire tail. Talking about a 20%. So I'm not going to draw that, but I will watch intently as it comes up here. And what you also want to pay attention to too, when you get, actually, what was that setup? Oh, that was natural gas. We'll go there in a second. When you get strong directional conviction moves like this, many, many, many times the market will retrace 50% of it and then die. And you can see that's exactly what happened here. So this obviously had to have been high volume move here, We retraced half of it, 50%, and then you got a selling tail. That told you right there something was up. It couldn't, if this were to retrace the whole thing, then you want to be long. Here, retraced half, then you get a selling tail. So tails are just instant rejection, right? Again, this is an hourly chart, so it's not quite instant, but it's still very important, and that led to here. So you want to pay attention to these areas when the market gets back up there, right? Those are great areas to short per se, or use for targets, or if they violate them to the upside, in this example, that's information as well, where you want to turn around and be long. These are all things you have to factor in when you're coming up with your thesis for the day. So what I got on a tangent there, but you want to look at the bigger picture, and then when you bring up, because we are day traders, right? When you bring up your charts, you want to say, okay, hey, is the volume, is the rest of the liquidity, is that in line with what I think is going to happen today, right? And then it helps you base your, and you could just say, I'm only taking longs today based on everything. I'm not taking any shorts. Even if you get a short setup, you just ignore it, that type of thing, right? So, if this does fail, I'll stop out, on to the next one, on to the next one. Trading is a percentage game. And if you think it's anything different, then you're in the wrong game. All right, so let's see. Any questions on that, Sam?
No, just new bass player just says thank you for sharing your knowledge. Yeah, it's interesting how you kind of plot your zones and levels. It was useful to go through that. Thank you.
Sure. This is all part of the trading. Like I say, this is the most important. You could trade these just based on the volume events and make money. I think you can be more successful understanding the bigger picture, obviously, but like I said earlier, I showed my room last December that, again, I have usually show this P&L every time we get on here. Should have restarted my computer. Hold on a second. So, you guys go to my website, you get discounts to all this. You guys should all be using this type of thing. There's this and there's a couple other ones. This Trader Sync blows the rest of them out of the water as far as I've seen for over my career of using this stuff, right? But if you go to my website, there's banners on my website for everything that I use, and you can get discounts for everything. So let's see here. I hope this is right. Restarted my computer and. What I wanted to show you was, I didn't put in the last couple of days of trades, pretty much scratch, but this is just showing, yeah, so this is last December, right? This entire month was just taking setups in a vacuum, where I would wait for the setup, like you see me drawing the zones, I'd wait for the full ATR, I'd wait for the retest, I'd wait for the failure, and I would get in. Same to the upside. That's all I would do. I wouldn't even look at where we were on the charts. And you can see, it wasn't a huge month, but it's still profitable. So my point is, this is the most important information, like I say, every webinar, right? And if you can layer this in to your thesis and the bigger picture, you'll be even more successful. But my point is, you can just trade these in a vacuum and still be a profitable trader as long as you follow the rules, right? Meaning you do the same thing every single time. You don't change things up. That's one of the keys of being profitable. So you can see this sold down here, and they started to try to pop it back up. You see these buying bubbles? That's the market buying, and they started running right into size. I don't think that's right, but we'll see here. Yeah, that's correct. So then, again, you want to incorporate all the bubbles that happen in this spike. You see the spike keeps going. I'm going to make this black for sell ice. Down here. Still part of that spike. So there's your zone. So you can see, talk about this all the time as well. When you pull up a market and it looks like a Christmas tree, it's just Algo City. Right? You would think, I don't want to trade this market because it's Algo City. But when the rare times that the big money does come in, it disrupts the algos, and that's where you get the big moves, right? So you can see this is just bouncing around. You had some, this is pretty big. Granted, it was right after the number, the natural gas number came out today, but this is still very, very large. Like there's double threshold that I look for to trade. So this area is a tradable area, right? So that's step one. Step two is figuring out your ATR. So you can see here, this is actually another good example, right? So this is obviously not a normal ATR for this market, right? This spiked up to 83. This just means 83 ticks is the average true range right now, which is extremely elevated. Do you have to be risking? So back to this zone. Do I have to risk? Cause say this comes down and I get short. Well, I wait for a full ATR. So that means I would be getting in at least 83 ticks below here, right? In the way I trade these is I put my stop 83 ticks the other way to give myself room, right? Well, do I have to risk 83 ticks both ways plus the size of the zone when I know that was like a one-time event in the volatility, right? No. So what you can do here, very rare, but in instances like numbers, Fed releases, stuff like that, you can use, instead of using the 5-minute ATR, which is obviously not, this is incorporating this huge move after the number. So this will start to dissipate. The real ATR should probably be right around 50. Right, for this market lately. So what you can do is take 20% of a hourly ATR. So you can see the hourly ATR is 240 ticks. All right. So that would be what, 40, say 25. So 50 ticks. Right, exactly what I just said. Right. So you take 20%. We'll just say it's 250 ticks, right? You take 20% of that. I mean, 20% of this is 48. So let's just say 48 to 50 ticks is if you're taking 20% of an hourly. You can use 20% of an hourly when you get a one-time event. Going back to this, you can see what was the ATR before the event. It was right around 50 ticks. See how that works? So you could, or you can just eyeball and say, hey, before this spike, it was right around 50. I'm going to use 50. Right, same thing pretty much, but you just want to, I would say use 20% of an hour. So that's how I do that. So my point is I don't have to use 87 ticks. I can use 50 ticks as my ATR. So that's step two. Now I want to see where we're at in the lugs. To judge if I'm going to take this trade aggressively or not. So we are below the yellow lug, so I can take shorts aggressively. I want to be careful if the relative volume isn't elevated. I try my best not to be entering, especially when I have such big risk. We saw this the other day in my room. There was a natural gas, and it was 50 ticks down to the blue lug. It was a short setup, but I had to risk basically like 180 ticks to take the trade. I'm like, well, I'm not risking 180 ticks to make 50, and it did come down, and you can see it on here. It was just a couple days ago, and it did bounce off of the blue lug. So my point is, unless I see some high relative volume, I don't want to short right in front of the blue lug. I'll wait for it to go down, make new lugs, and then, so this was this day right here. So the setup was like right here, and I said, well, do I want to take a short where I'm risking, it was like, I forgot what it was. It was definitely three times what I was going to make. And I just didn't take the trade. And it did bounce off the blue lug many times. And then, so this is a good example. And then what did it do? It finally busted through. It had the conditions to build new lugs, whatever her magical conditions are. They're pretty unbelievable. And what you expect is prior red and directional yellow to hold. You can see this got a little bit above here, but once it went back below here, I'll bet you that hit the blue before it hit the red, upper red. Let's see. Actually, yeah, right there. Sorry, I didn't do that. But it you had to sit through that entire thing, but it ended up hitting. No, I'm sorry. We're still in this condition. So this is now, right? So this is what I was just showing. So it basically held, tried to get above. Right, hold on, sorry. Well, let's see. this is also, so what I was getting at here is once this held and got back below yellow, you expect blue. But we talk about this on the webinar too, that I was talking about earlier. If it keeps coming down and can't tag blue and then ends up getting back above yellow, then you expect the other way, right? These are just different scenarios you can come up with for thesis wise of what's going on in the market on top of your longer term stuff. So let's just see what happened there. This was the number. So this is, you know, so you got to remember too, even with your setups, I was just talking about this yesterday, into the Fed number, into Powell speaking, right? If you get volume events, or if you say you get a volume event before the number, well, when the number comes out, all bets are off for prior stuff, right? So you got to be very careful of using prior zones once new information hits the market. So someone in my room asked yesterday, he's like, there was a setup, and like, are you going to trade this? I was going to trade it, and then I'm like, yeah, no, I'm not going to trade it, because a half hour later, Powell was speaking. So I'm like, that's like a brand. It's like every word that comes out of his mouth is a new number, right? So you want to be very careful, even with this stuff, using, when I was coming up with the thesis, even though neither one of these have been tagged yet, once something new comes out, then you can start to judge it, based on after the new information comes out. And same with setups. Just be careful using setups before a market moving event, because all bets are off, and now you're looking for the new event. Now we did get a new event. It's below the yellow lug, so I'm thinking we can get to the blue lug. Hopefully that wasn't confusing, but I was just trying to show you an example with the lugs, but what that wasn't great. Even though this has not been defined either way, but this was the number right here, right? So it still did not, it tried to spike above this prior red, couldn't get there. Now we're above. I think the odds are we're going to hit this blue finally. This is pretty amazing. There has not been one thing. I take that back. There's been this in NASDAQ, but this thing can't even get an ATR above or below the zone. This is pathetic trade. Right, so this is holding. You can see how important these areas are, right? This is not coincidence. This market keeps. This is where that stop run was. Test. Hey, look, I wonder where we're going. Anyone want to guess where the sun's up today? Anyone want to bet? We do this almost every webinar. I'll see the. It's obviously not rocket science. I'll see the liquidity, and I'll bet that we touch it by the end of the day. And 99% of the time, at least one of these bands are touched. So you can see tested. What I'd love now is a new setup where I can add to this trade, knowing this is exactly where we're going. So let's see if we get that. That is now an official ATR above this zone. So now if I get a retest failure of this zone, I could go long the NASDAQ. So, and here's the other thing. People are like, well, what if you don't get a retest? Well, these are my rules, right? We're below the yellow lug, so I need to see a retest. Does that mean this market can't just rip off the page? No. Am I going to miss a trade? Yeah. But my rules are, if we're below the yellow lug, like we are, I wait for retest failure of the zone. And this is over here, tick strike. You got, again, go to my website. You get discounts to this as well. This is an algorithm showing you the speed of the orders and the size of the orders coming in. It goes from 1 to a 15. So 1's the most sensitive. 15 is where you have to see some serious buying or selling for these to fire off. I put them at 11 because I just want to see the very aggressive buying or selling. But it would behoove you to have this information, because these are the highest weighted stocks. We did this the other day. Just Google S&P weighting, stock weighting, or NASDAQ stock weighting. I think it was like 24% of the market was like 4 stocks. It was like Apple, Microsoft, Google. I want to say, might have been Amazon. I can't remember. But you want to know, especially you can use this to your advantage in certain areas. So say we come up to say there's a prior zoning or something that led to a huge move down, and we come up here, and none of these are firing off, right? Well, that's a sign too where it's very likely to fail, because you don't have any of these are the stocks that drive the indices that drive the futures. So it would behoove you to know what's going on, right? So I have the actual futures here, and I have the stocks here. So you can know many times, like even going into spot gamma levels, so on and so forth. Hey, is this buying real, or is this just a fake move by the algos, right? So you want to see these stocks participating, if whatever direction that you're trading. All right, right, so I'm just waiting for a retest of the zone or something new. It'd be nice to get, any signal whatsoever in ES, or a new signal in here. But you can see this thing has moved 40 points down, and I really, really wanted to buy in this area. And we talked about this. This was an important zone, but I from the way I trade, I did not get a sub. I didn't take it. You can see this zone, how important to know these areas. This was where this started. This is where this ripped right through. Here's your retest. And what do you see here now? Two different buying tails. That's bullish, right? So I didn't get my setup here into this zone like I wanted to, but the information is important. Came down here the first time, buying tail, even a bigger buying tail this time. That's instant rejection. So now if I get a bullish setup, I know I have a very high percentage of this market ripping because of what didn't happen here. It wasn't able to get back through here, held, and then put a current setup in, meaning as far as the structure stuff, put in two buying tails. Now if I get a bullish setup, I really want to be long, right? If this would have broken down through here, then I wanted to be short. But that's just part of my equation. Now I want to see a real-time event, volume event. If not, I'm not trading it. That's what's called being disciplined and waiting for your setups, right? But it doesn't mean you can't be watching these markets and like, okay, that's interesting. Okay, this zone held. It ripped through there yesterday, came back, held. Okay, now the minute I get a long setup, I can get in. And then that could also be, like we talk about all the time, where that happened down here. It held these spot gammas. I'm just adding different variables that you can be looking at, right? This held that zone that we just looked at. There were buying tails. It held the spot gamma. Now if you get a volume signal, volume setup, you could, actually, why did this not fire off? Let's see, this is a stop run. Yeah, that was only 370, so 500 is my, I know it says 600, but that's combining these two. I don't do that. You see how these are like 2 minutes apart? That's combining the two. My point is, I say it all the time, this is the science. There's no disputing this was a stop run, this was a stop run. The way you trade the area, that's up to you. I highly recommend if you're just learning, you kind of follow my rules until you watch enough of these. You got to remember, I've watched thousands and thousands and thousands of these, and I've determined the best way to trade them is the way I trade them. But you could say, after what we just talked about with the thesis, hey, it held. The minute I see a setup, the minute it breaks out of that zone, I'm going long. I don't need to see an ATR. I don't need to see a retest to see what I'm saying. So you could be in immediately. That's up to you. You can trade these how you want to trade them. This is the way I trade them. But there's no looking at this in a different viewpoint, from a different viewpoint. This is the science. There's no disputing what happened here. It's how you trade the area. That's up to you. Again, I have certain rules that I use because I've watched them for 3 years, right? So, but the better you get at them, there are exceptions where you can take aggressive entries, so on and so forth. So all I know right now, I still won't be aggressive. I'll still follow my rules, but right now it looks like I want to be long. Oh, now I'm just waiting for a setup. Any questions about any of that?
Yeah, that's an interesting way to look at it, like combining the facts and the science with what you can see, the stop runs and whatnot, and then the art of execution, if you like. That's kind of more up to you and how you want to do that. Yeah,
right. That's the whole point, right? It's but like I said, if you're new to it, you probably don't want to be just guessing, hey, I'm going to get in right in the middle of this zone, hey, I'm going to get in right when it breaks out. I would highly recommend you follow my method until you get comfortable, and then you can start to mold it into your own methodology as far as how you trade them.
We have some great praise from Antonio in the chat. He says, "Thanks for all the great information. It's a pleasure to watch your lessons. Better than watching a movie." So he doesn't say which kind of movie, but he's enjoying it. Thank you, Antonio.
I
Yeah.
appreciate that. Some days it feels like a horror show, but that's what trading is, right? Like, guys, I mean, you just got to understand. You've got to, again, when I went on vacation, I listened to the audiobook we drove to California, and I listened to Trading in the Zone again. Just really, really important stuff from the mental side of things and what to expect, and understand that trading is a probability game. You just continue to put on the trades with your rules, and if you have a discernible edge, you will make money as long as you follow your rules. And I use this analogy all the time, liken it to a casino, right? A casino, it's the best analogy out there because anybody can come in and smoke a casino one day. Does that mean they change the rules? Just liken it to trading, right? A lot of times, so even with this stuff, right? With this volume. So say someone just gets Bookmap and this is their first webinar and they're watching these zones and they're like, okay, I like that idea, right? And then they see their first setup and they follow my rules and they're getting in, and all of a sudden the market does this and stops them out. And then it does it again. So they have 3 losers in a row. Like, I'm not doing that. Okay, I'm going to change this. I'm not going to look at that, and I'm going to do this. I'm going to change my rules on this. When someone walks into a casino, a whale, as they call them, like a high roller, and smokes the casino for $1 million in a day, does the casino change the rules? I mean, granted, yeah, a lot of times they'll kick the guy out of the casino because it's a private establishment. I've had that happen to me for counting cards. I don't want to get into that. Maybe if it gets really dead, I'll tell the story a little later. But the point is, they don't change their overall rules, right? They don't change their blackjack. Say it's in blackjack. They don't change the rules of blackjack. They know over the long run they have probability percentage because of math, because of their edge. They know that's their edge, that they will make money. So they just let the players play, and they know, and this is what their equity curve looks like. So tell me, right? They'll come in and big player will smoke them, and then they'll make it back. Big player, right? That's what your equity curve should look like if you have an edge, right? So just showing here. This is what an equity curve should look like if you have an edge. Right? So you can see there were plenty of drawdowns in here. Did I change my system? Did I say this doesn't work? No, I know that is an edge. I've been watching it for years, right? I even went negative here earlier in the year, right? And this is right around the war. I was getting smoked a little bit, but you can see this is what this. I guarantee you, if you pull a casino P&L up, it looks exactly like this. You're going to have drawdowns. And you just keep taking your trades and following your rules if you have an edge, right? You got to make sure you have an edge, and that could be many things, right? My edge, the ultimate edge, in my opinion, is the real-time volume, right? And then you can enhance your edge by understanding the bigger picture, so on and so forth. All right, so just waiting for either a retest of this zone. It's not like this zone was huge either. It was barely threshold, but I mean, there's been absolutely nothing in these markets today. So I'm waiting for a retest of this or something new.
We've got a question
Nice to get
on the volume.
Yeah.
Can someone explain to me when and how does it look when you see buyers coming in? Is it the pending liquidity that comes into the book?
When you see buys?
Yeah, basically the kind of different types of volume and the liquidity and the aggressors. So
liquidity are resting orders. We call it liquidity, right? It's just resting orders in the order book. That's liquidity. You don't want to be trading this type of liquidity that just pops in and out of the order book. You want to look for longer term liquidity, as far as, like I was talking earlier, you're looking for, to come up with your thesis that acts as magnets, right? And that's not the opposite. Most new traders will look at liquidity in there, and again, this is a good example in soybeans, right? This is the kind of liquidity you want to look for. That's been in there for hours, if not days, right? These are, most traders would say, wow, look at all these offers up here, man. I want to be short because these guys want to sell. It's the opposite. You want to be long because these guys are going to get their fills, because when it gets, they'll be loading up down here, and then as it gets closer, they'll step on the gas and they'll push the market right into their orders. I told you this was the game I played all day, every day when I was a huge scalper, right? So that my setups are not based on theory. They're based on my actual market experience of watching this stuff, millions of contracts, me trading personally millions of contracts when I was a scalper. I used to average 50,000 round turns a day, millions of contracts a month, right? So they're all my setups are based on how I used to respond, how the people I was trading against used to respond. Like I tell you guys all the time, you used to be able to see counterparty. So the minute I traded with somebody, I'd look down and I'd see the exact house that I was trading with, right? I know 714 was FEMAT. My nemesis was 990, the guy that manipulated the markets all day, every day, so on and so forth. So I would see who I was trading with. So I would see how they would respond to getting loaded up and being wrong, being right, and I'd know how I would respond, right? That's what my setups are based off of. Can't remember why I went on that tangent, but so yeah, the liquidity. So back to what you were asking. So liquidity are resting orders. These bubbles are market orders, right? So it's just showing you, and then the size of them are if it's bigger or if it's larger orders coming in. So I don't trade off the bubbles. There's times you want to watch the bubbles in the important areas. So say for instance you're watching this liquidity, you're like, okay, I'm going to watch this liquidity. I'm long from down here. I'm watching this liquidity. If it struggles at this liquidity, I'm gonna wait for them to get their fill. I'm gonna be out. Well, that's a good example where you can watch the bubbles. If it comes up here and you see blue and they take out the liquidity, and then you start seeing red bubbles, well, you probably want to get out, right? It's telling you that. Or say it comes up here and you see nothing but red, 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 red. Something's up, right? The buyers aren't winning. This is telling you who's winning or trying to win, and you can see the buyers are aggressive. So that's what these bubbles are showing you. Liquidity is resting orders in the order book, and it's just showing that the darker the red, the bigger the size is relative to the rest of the order book. That's all that's showing you, right? And you can see this move is being supported by the underlying stocks. That's why I call this stuff waterboarding, because it gets big time on your nerves. You can imagine. So say I'm short and I'm watching this, that's painful enough, and then I got to listen to this. It's literally like, I've never been waterboarded, but like I say all the time, it's got to be pretty close to the same feeling, right? Because you're getting all your senses tickled the wrong way. Like I'm watching it, I'm watching my P&L get smushed, and I get to listen to it. But this is still very, 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 very important.
152 contracts.
Oh, there you go. Okay, so this is a good example that I am long this. So you guys, I mean, look, this is the same pattern every day in these markets, right? This was the volume event. Market moved away, screwed around, Algoville, couldn't penetrate the volume event, gone. Now we have a new volume event. Now what can I do? We already know this market is looking very bullish, right? Let's see. Where did I don't see it though. Problem. There's something with rhythmic lately so I'm getting these. I'll show you guys here. I don't know if you guys are getting this too. I know some room members were getting this. I'll screenshot this for you guys. I don't know what's going on here, but we just heard that setup, and this is what I'm seeing. Like this was earlier, but it's like lost connection. I sent it to developers last night, and they said that Rhythmic was having problems. So they may still be having problems. But anyway, you just heard that alert. 152 contracts. Oh, you know why? Because this is why. So this is not a problem right now with them, even though those signals that I just showed you did happen. The reason I'm not seeing it here is because I saw the August contract running. This, roll. You want to roll. The most volume is majority of the volume is in December now. But we'll take a look at this. I thought I X'd out of this actually. Let's see. So I mean, you could still trade August. Let's just take a look. So this is how you guys want to judge. It's actually crazy. I'm really glad I'm not involved in it. Not. I'm over here coming to go to the CME markets, gold. Get this out of the way. Quotes. All right, and then you want to see where the majority of the volume is. You can see, like, I don't want to be trading August at all. 28,000 versus 137,000 in December. So if you haven't rolled your gold, roll your gold. But that's pretty significant in that there's a threshold volume set up in gold in August when there's no volume in there. I'm not going to trade that, but you could pay attention to it in the DEES contract. Right? You can see that's. So let's just draw this again. I'm not going to trade this month right now. I'm just going to trade DEES, but you can see. So this is a good example too for what I was telling you guys earlier. I'll show this. But first of all, we want this spike. So the spike was 150. My threshold on gold is 150. Right? And I have to illustrate in here because nothing is going on as far as my setups. So this is a drawable event. You can see this is one house. See this black line? So they were selling here. This touched. So this is okay to use So here's the market. You see this big buying? Ran into sell ice. This was only 100. That's not threshold, so I didn't draw the zone. Came up here again. Well, now there was a little more. That's not threshold. Now that's threshold. So in this instance, they're all at the same price, but there are going to be times where you'll see the sell ice. It'll look like this. Let's just use the colors so it's not confusing. It'll be like blue bubble, and it'll be less than threshold. And then they'll move it up. Remember, ICE is hidden, just hidden orders in the order books. You're not seeing it here, they're hidden. But the market will move up here, then it'll touch it again, and you'll see the line go like this. And there's a little more, that's still not threshold, then it'll go up here, and then you'll get the threshold. Well, draw the zone for that threshold event. You don't have to incorporate, even though it was one house, this isn't, there's not loaded up traders per se in this one little event. You want it, where the most size came in. So it's just a way to keep your zones, realistic instead of having to draw these huge zones based on volume that wasn't, a ton of volume. This, of course, this was one price, so you want to draw that zone. But all right, so that's failing there. But I'm not going to trade off of that. I'm just going to keep it on the D's product, the D's month. But you can see, look what's above. I wonder where we're going. Anyone want to guess? So this, guys, this just helps you stay in trades too, right? I mean, I'm staying in this trade regardless until I see an important Ludwig level or an opposing setup, or you could get out of pieces at the liquidity if it can't punch through. But the point is, these are algos. You're going 95% of the time. You're going to go. This is what traders can't sit through, and if you can't sit through it, then you're not going to make it because that's all these markets usually are. 85% of the time, it's this stuff. This could come all the way back and screw with me and for the next 4 hours, but I stand firm in my rules, right? So the point is, you see this, that's where we're going. Doesn't mean it's going to happen right now, no, right? So that helps you sit in the trade as well, and especially in gold. Gold's one of the biggest, mind screw jobs there is as far as having to watch the whipsaw nonsense. Still don't have a setup in here. This was close, 400 stop runs, but So I will increase my thresholds in a day. I never go below. Meaning, if I keep seeing 2,000 ice, 1,000 ice, 1,000 ice, then I'll be like, okay, do I want to use 700 a day? No, I probably should be using 1,000. But I never go like today. There's not been one setup in the ES. Does that mean I'm going to lower my thresholds? No, I don't go lower than 700 ice, 500 stops. So my point is, I'm not going to draw this zone either. You could. Again, this is your prerogative, but. Do you want to just roll with it or trust my watching thousands and thousands of these and know what is relevant volume and what is not? All right. I'm just going to X out of this gold contract because I don't want it throwing me like it just did. Soybeans just won't. You know what you're going to do, soybeans, just do it. Tortured. So, you heard these things going crazy that led to this up move. But there's no big players playing right now. I'm really, really surprised. Like I said, the day after the Fed is usually where you're getting some serious setups. But on the flip side, this volume is not bad. Relative volume. This is another thing you want to watch closely on moves, because if you're not seeing good relative volume, the markets are probably just algo driven, and it's going to turn around and flip and whipsaw. This is not bad volume. So I don't know if there's a problem with that, again, the rhythmic data or what. This is very weird to be seeing 2 times normal volume, 1.5 times, not getting any setups. Really odd. This whole day has been pretty decent volume. I don't know. There could be something with the rhythmic data. I know they've been having problems lately, but I mean, I'm getting setups in other markets. I don't know. Is there any? Are you guys getting setups? If you're getting setups in these markets, please post it. I'd like to know if it's just my computer or what. None of these are threshold. So, this is an example of the art science, right? So that was that setup. We didn't quite get an ATR, or did we? I don't think this was an ATR. This is what we were watching. I'd be very sad if it was. This came close to an ATR. But you could have said, you know what, Scott, that's an important zone that you just pointed out. This got close enough. I'm taking this trade. Again, this is the science, the art. You can trade this however you want it. I waited for a full ATR. I missed it by a couple points, and I missed this trade. But you can see this is not coincidence. This is where this market pulled back and launched from. That's why you want to know where these volume events are. I mean, I could have used 120 points. That would have been nice. 140 points. But I try to stay consistent with my rules. I do screw up sometimes. I come back from vacation, the last 2 days webinars, PM webinars. Both times I broke my rules. I'm like, I'm going to give this a shot. Both times I lost on the trade. So it's just like a slap in the face, like, stop being a moron, follow your rules. But, you know, it's like you do that enough. I know traders do this all the time. They're like, you know what? I'm just going to dip my toe here. I'm just going to trade one just to get a feel, whatever. And, you know, you do that enough over the year, it adds up to a lot of money. So, like, I think I cost myself $4,000 in the last 2 days just putting on small, like yesterday, I put on half size. Right, you do that. You add it up over a year, it adds up to some serious money. So the point is, I need to be following my own rules and my advice, and not be. So then again, the time that I do follow my advice, then I miss the 140 point trade. But that's the way trading is sometimes. Again, this ATR has been up near 35 this whole time. I was waiting for 35 points out of that zone. And it just didn't get there from the top of the zone. Right, that was at 86 quarter. We were looking for 21.50, I think it was, and it got up to 15 here. And then, so I missed it. I missed that ATR retest fail by like 4 or 5 points. I missed the trade. But trust me, there's another 1,000 right behind it. So. Because if I would have taken that trade and got long and it would have ripped down below me, which I did think it was going to come down to that blue lug, I would have been really mad at myself. And then that's how you get into slumps, right? You do something that's not your rules, you take a loss, and then it just snowballs. And then all of a sudden you look at the end of the week and you had one of your worst weeks ever, and it all started because you didn't follow your rules on one stupid trade, right? So it's really easy to do. Trust me, I've done it the last 2 days, and I've been doing this for 20 plus years, right? It's easy to do. You've got to constantly monitor yourself from being a moron. It's not hard to do. All right, so there's really nothing going on. Any other questions, Sam?
Just on that note, talking about thresholds, you've obviously got your rules and thresholds for a reason, whether it's your own experience or you've back tested them and you've got your numbers, and those are the numbers that work best. But if you do, do you have a process to kind of update your approach? Not kind of take little dabbles and punts here and there, but update your whole thresholds over time.
Thresholds, I have a couple of products. I mean, it's pretty amazing. I made my first course 2 years ago, and it's pretty amazing. Most of those thresholds are still right on. I've increased a couple of them, like I think NASDAQ I have in there like 110 or 120. That's up to 150. ES is exactly the same. The only one that's pretty significantly higher is our bonds. So bonds, I think I had it 300 or 200. I can't remember off the top of my head, but you definitely want to be using 500 or more in this market if you're trading bonds. You can see these spikes here. You can just look at, if you pull up a chart and you see. So here's, for example, right? 300, 350, 230. If you see 22 spikes, that is not a relevant threshold, right? You should at most be seeing in your select market maybe 3 to 5 setups in a day, right? If you see, and this is where, so say this was 500. If I see 500, 500, 500, well, I'm like, okay, today I need to be moving my threshold up. The 500, there's obviously some serious size coming through here. You got to use a little discretion in your trading, right? Like same with the volatility, right? That's why I use the ATR, because there's so many traders. I can guarantee you a very high percentage on here like they like trading the ES. I like to put on my trade where I'm risking 3 points and I'm making 5, right? Okay, great. But guess what? When the volatility, the ATR is at 15 or 20, you're just asking to lose your money, right? So you've got to adapt on days when the volatility is higher. You got to adapt when the volume is higher. So my point is, if you look at a chart and you're seeing 500, 500, 500, 500, you don't want to be using 500 that day, right? It doesn't happen very often, but when it does, you just need to increase your thresholds. So that's where I make adjustments. You know, again, today there hasn't been a single setup in ES. Could you lower your threshold? You could. Do I? No, because I've just been burned trying to do that. So I go minimum. This could sit here and do nothing all day. If I don't see 700 icebergs, I'm not drawing a zone, right? So I don't lower it, but I will increase it. Other than that, yeah, I haven't really, you know, I haven't really changed much in my since my original course. I have the new course coming out. I'm almost done with it. It's just been, you know, I went on vacation and I need to clear it because it's so much more involved. Like this course is like my first course on steroids times 10. As far as setups, I talk about the ATR, drawing the zones, the you know, these other I don't have advanced CMAP, but it'll be the on chart, the sweeps, all this. This is just very, very detailed, so that's why it's taking me so long. But other than that, like the setups, I've added one setup since my original course, but everything else is pretty much spot on. So
Yeah, we actually have a question on your course as well. Last time you were mentioned releasing a new training video. Is that now available, or maybe you want to update us on that?
no, that's the course I'm talking about. So I'm in the
Okay.
process of finishing up that course. You know, if you bought the original course, or if you do buy the original course, there's going to be a substantial discount for the new course. And then if you're actually an active member of my trading room, so say you're in my trading room, you buy the old course. When I release the new course, if you're still a member, then you'll get the new course for free. So, but that's what the training video I think he's referring to. Is just the new course that's going to go over everything that, you know, I get asked these questions all the time, even in my trade room, like about the ATR, drawing zones, and so on and so forth. All that stuff will be covered in the new course. It's just, again, it's been very involved, and it's just so many hours in the day. And I trade all day. I do the webinars after the markets close. I'm mentally just beat. It's just hard to just hop on and work on my course a lot of nights, but I'm getting there. It'll be out soon. All right, so once again, you can see here though, I would have loved to signal down here. Look at the magical Ludwig levels, lugs, blue held, gone. They're incredible, guys. I'm telling you. This is the second most powerful thing I've seen next to the, you know, Bookmap and Bookmap SI indicator as far as support resistance, and then coming up with scenarios based on what they're doing with the lugs and drawing new lugs, so on and so forth. I was really hoping for this. You can see we tag we call these baby lugs. These are the minor lugs, but you can see this word. I was really hoping to get one more move down here and get it set up, and did not get it, but it's still really important to. This is one of the things, if you watch the webinar I did with her, again, it's actually in this room. If you scroll up to, it was probably a month or two ago, I posted it. If not, just email and I'll send it to you. But she talks about, you know, if you come down and you don't tag the blue, that's a very important sign, especially if you get back above the yellow. So now you can expect that. So this one I'm talking about coming up with like a thesis based on what happens with the lugs as well. So, you know, if you already want to be long, like we've been talking about, this is still looking like short-term bullish, and then you can't tag the blue, and then you get above the yellow. Well, you already have the bullish context, right? Now you say, okay, I think we can get up there, and now all I need to see is a volume setup, and then that's like an A+ trade. So I think that's about it. There's just really nothing going on here. We're still in this zone in natural gas. Again, I won't trade to the short side because we're so close to that blue lug, but I will. Many times what will happen here is see here, we will come down especially in this market. This market can move 500 ticks at a time, come down, bust through here, build new lugs, then it'll come back, retest that volume setup I just drew. Then you could go short. I will go short if we get new lugs. I just don't want to. We just saw what ES did at the blue lug, right? I know how powerful these things are. I don't want to be taking shorts. So if we break this current zone, you know, I'm taking a short, risking like 100 plus ticks to make. You know, this is 100, but here I'll just give you an example. So if I do take this, if I did take the short aggressively, which I should below the yellow lug, meaning just outside an ATR, we already know ATR is. It's still at 76. But we know if we're taking 20% of the hourly, like we talked about earlier, it's about 50, right? So even if I got in, so say I got in 50 ticks below here, right? Just get this loaded up if I wanted to do this. So I've taken the last two digits, 21. So 50 ticks below here would be 71, 83, 71, right? Okay, so that's where I would enter. If I got filled, I would go 50 ticks. So this zone alone is over 100 ticks wide. And then I'd have to risk the way I trade them. Again, my art, the way I trade it is I go 50 ticks outside this zone. So now I'm risking, it's at 858 down to 830. So I'm risking 200 ticks basically on this trade if I take this trade. Well, it's only 100 ticks or less down to the blue lug. So do I want to risk 200 to make 100? You're not going to be in trading long if you're trading that way. You're not usually going to be in trading long if you're only getting 1-to-1 on your money, right? So that's why I would not take this short. So what I'm saying is, to the long side I could, but I'm not going to take it aggressively because we're below the yellow lug. But if we end up getting, again, we're still in the zone and this still could happen. But if this scenario unfolds today where you go, we do get the 50 ticks, we retest, we fail, I will go long that because, you know, there's a long way to the red lug. I'm not taking it because the blue lug's right here. But like I said, say we do this and we build new lugs and then we come back, retest, fail, then I'll take the trade because now we have brand new lugs and the new lug will be probably 500 ticks away. See what I'm saying? So that's how I'll trade this current setup. Other than that, I'm just being tortured in soybeans when I pretty much know where this is going to end up. It's just sitting here doing nothing. And then gold is just being gold, and every time you think you got it, it does its usual algo nonsense. So I'll probably sit through this for the next 5 hours, but long this as well. And that is about it, guys. I did not, some days you just gotta, this is how I trade. If I don't get my setup, I don't trade it. You could have potentially taken this if you wanted to be aggressive out of the zone, or you said, hey, that was close enough to an ATR. I followed my rules there, and it cost me, and I'm fine. You know, again, there's another 10,000 setups right around the corner, right? So, especially, this is another reason you want to be watching multiple markets, right? So you see nothing's going on. Some guys and girls, traders, don't have the bandwidth to watch multiple markets. But if you're just looking for distinct things, you could watch 3, 5, 10 markets, and you're just looking for a certain thing. Again, being the sniper, like I said, if that doesn't happen, you don't trade. So some areas I'll be watching here in ES, because I know everyone loves trading ES for reasons I don't really know, because the market sucks, in my opinion, most days. Red lugs all the way up here at 57.50. So just check our zones here, see what's up there. I mean, I'll still take long, like we said. I mean, this stuff was all screaming long, especially when you put in the second buying tail. I would have loved to get a setup here, didn't get it. This thing is heading up here. So this zone, let's see what this zone was. So we already know 57.50 is the red lug. This is a really important area, right? You don't get a much more defined balance area than this puppy here, right? This zone was support, directional conviction, and a buying tail. Support, directional conviction.
Stop by ES.
Hey,
530 contract.
that's something new. Every time I go to get off a webinar, I get a signal, which is fine. It's tight, but it's just hysterical. So anyway, this zone's really important. This is where this broke down out of this balance and led to this whole down move. So really watch, if I end up getting long here, I'm watching that red lug and I'm watching the bottom of the zone right around 66. All right, so let's draw this zone. Just when I think I'm out, they pull me back in. Movie, Sam?
Don't ask me. Maybe someone in chat
You
can
don't, you
help
don't,
me.
you don't watch American movies or what? What's going on? It's a classic. Godfather. Actually, it was Godfather 3. Pretty embarrassing. Sam, I expect you to watch all the entire trilogy by the next time you're on with me.
Okay, that's
Or
my
I don't
homework.
think- or I don't think I'm going to talk to you. All right, so here's your. Finally, we get a volume event. Only an hour plus into the session. All right, so here's your stop run. I am bullish this market. Does that mean I won't take a short? No, but I need to see. So what are some of the things we see here? First of all, there's really nothing. What we just did is broke out of this smaller balance area. We're breaking out right now, right? This is from yesterday and today. So yesterday the Fed met, pulled back. Today just built balance, breaking out. That's very bullish. There's nothing here structure-wise either until we get to this zone. So that's bullish. We are above the yellow lug, so I'm supposed to take this trade aggressively. The only thing I'm hesitant about is we're like 3 standard deviations from VWAP, and unless the volume is extreme. Volume, actually it is, so I'm okay with taking that as well. I'll show you here in a second. So ATR is 7.72. So I will go just outside an ATR, so 8 points above here, I will take this trade. The other issue here is this is the whole reason I didn't take the natural gas trade. We know the red lug is at 57.50, right? So if I'm going 8 points outside of here, what did I say it was? 8, yeah, 7.75. So I'm going to go just, so I'm getting in at 54 with the red lug right there. So this is where you have to make a decision. My rule is I don't usually take that trade, but this one I will take. I'll give it a shot, and I'll show you why here in a second. So first, let's figure out the top of the zone was at, there's enough on that. We talk about this in my room all the time too. There's enough on the bullish scale, right? So when you're deciding whether you're going to take trades, it's like a scale. Not everything is always going to be in favor of, right? So you got your short side, and you got your long side. Well, on the short side is we're extreme standard deviation. I'll show you that here in a second. We're close to the red lug, right? Check, check. On the long side, breaking out a major balance. Held that major zone. The stocks are agreeing with this up move. There's high relative volume right now. That's the biggest one. You can give that a couple checks. I'll show you that here in a second. So there's enough here where I'll take this trade. It's a little risky, but I'll take it. So 8 points above here. Top of the zone was 45.50, so 53.50. I will take this trade. We're right into a spot gamma level too, so this is not going to feel very comfortable, but I'm willing to take this. I know the red lug's right here too at 57.50, but the reason I'm going to give this a shot is because, so first of all, you're not going to make a living taking trades most times at extreme standard deviation. So you can see here, actually I take that back. I'm not going to take this trade, and I'm going to show you why. So where I just talked about the scale, well, what's another major thing we haven't talked about this today because nothing's been going on, and I'm sure my trading room would like to see this because they can't see this screen while I'm on these webinars. One of the main things I look at is whether we're overbought or oversold. So it's called the Edge. It's a TAS product that's not available to the public right now as far as I know. I know he's working on it. They're updating it. But you can see here, this is all 500 stocks in the mini S&P 500. Right, or the S&P 500, 323 of them are above their 5-minute TAS boxes. So I'll show you that here in a second. It's just like mini market profiles. But when you get extended, that means that 323 are above their boxes. They will pull back. So I very rarely will buy or sell if, so you can see the green line, it's above the 67% line because the markets pull back all the time. Doesn't mean this thing can't get up to 90%. But so there, again, check mark on the bearish side, or not on bearish side, but do I not want to take this trade because of something that I know this thing's going to pull back, right? So everything we just talked about, I'm getting in right in front of the red lug, right on top of a spot gamma level, or 3 standard deviations from VWAP. That's what I was just showing you guys. So again, all my conditions aren't met. It doesn't mean that it can't pull back. Then I can get long, right? I'll give you an example of that here in a second, but I'm telling you right now, you are not going to make a living trading. Here's VWAP. This is called daily value area. That's 1 standard deviation from VWAP. Here's 1.5. Here's 2. So that's like 2.5 standard deviations away. you get these algos that will kick in and revert it almost always, right? Unless the big money's coming in. So what do we see here? We're just talking about this relative volume. You can see there's some big money playing right now. That is, you want to see that, especially this time of day. That's impressive. And this is showing you this exact time period for the last 30 days. This is more than 2 times normal volume. So these are the times that the market could continue higher, even though we're at extreme standard deviation. But like I said, I was going to just take this trade until I saw this edge product. So this is what I'm talking about. It doesn't mean what I want to see happen here. So this market could stop. You can see these things are starting to die down. Right. So this is overbought. We're at 75% of the stocks are above their 5-minute TAS boxes. Again, the TAS boxes are just these things right here. They're just mini market profiles. I don't use these to trade off of anymore. I used to use them because I use a lot of big levels. But you can see, like, this is exactly what it would look like, right? Imagine one of the S&P stocks. Here's a 5-minute box. It means they're up here. Well, many times the market will revert or draw a new box, but either way, they'll pull back. So I'm not buying this market when we are that extended, when you have that many stocks above their TAS boxes. So what does that mean? Well, this is temporary, right? It just means right this second I don't want to be buying. This thing will pull back, and what's probably going to happen here? See what I mean? This is exactly why I didn't want to buy. I probably would have been filled on that too, right? That was 53. But what could happen here? This thing could come up here. That edge is at 75%. Okay, well, I'll wait for it to pull back. It'll pull back right into this zone. This thing will go back down to like 50%. And then when we come back up, this will only be like at 60%. Then I can go long. See what I'm saying? So I use that to help time my trades. There's so many different things. Again, like the VWAT, we're extreme standard deviation, overbought, near the red lug. Is that worth a long? Not right now. I will take it as long as the edge. It's still very risky because of the red lug in this, but if the edge isn't overbought, I will give this a shot. But right now, I was not going to buy that. And you can see, if you have that information, you're not chasing the market. You're like, okay, I'll just wait. Right? So technically, this still did not get an ATR above this zone. So we don't know what the setup is yet. Right? So this was at 45.50. We needed to see 7.75 was the 7.79 now. So I round up, so 8 points. So we needed to see 53.50. So we still don't know. This could still be a dumb and dumber.
Soybean iceberg sells ES 201 contracts.
Okay. Again, right when I'm going to get off.
Soybean iceberg sells ES 201 contracts.
It's a good thing because I'm long. I'll just do this quickly. So now what I can do, hey, you guys surprised here? What did I say? Who bet me? You bet a round of golf? That's liquidity number 1, filled. So here, I'll give you an example of how you can use this liquidity as targets, right? So if this can't push up through here and I start seeing the red bubbles, I'll get out of a couple, right? This is where you can use your liquidity, even though I think we're coming to this one and this one. If this can't just pierce right through here and this starts to sell off, this is where you want to use your bubbles. So if I start to see red bubbles back below this liquidity, I'm going to get out of a couple. I'll just put this in right now because I might not be on this screen. So that's how you can lose liquidity. But like I told you guys, these are magnets. These manipulators will get the market to their orders eventually. Does that mean it's going to happen right now? No, I just sat through this trade for 2 hours, and here we go. Okay. So if this comes back, I'll get out of a couple. And then quickly, and I'll show you, yes, and then I'm going to hop off here. Because I know that the Tom guy, I think, is going as well in the other room. Beans. So this is my ultimate goal, and you can see it's right around where that major liquidity is too, 54.50. It doesn't mean I'll get out of some because this could pull back. Oh, and the other thing I was going to show you, this is a brand new volume setup. So actually, I don't even need to do this right here with this liquidity because I got a new volume setup. So this is what I'm going to do here. 260 threshold. Draw this zone. I get out of one or two reasons. Well, I get out of liquidity sometimes if it can't puncture through like I just showed you. But my main reasons for getting out are major lug levels or an opposing volume setup. Here's your volume setup. Make sure you get all the bubbles in this spike. That's there to there. Now, if this comes back, an ATR below this zone, I'm out of my full position. I'm not I don't ignore, even though I think we're going to go to liquidity, I'll get another chance. I might pull all the way back. So here's your ATR, 3.73. So I round up, I go just outside an ATR, so let's go 4 points outside of here. So the bottom of this zone, 39.50, so 35.50 I will be out of this trade. There won't be much of a profit. Doesn't matter. It doesn't matter what I want, right? I'm following, if this is truly bullish, this will hold with higher. And then what I can do, if this does hold, because I'm above the yellow lug, I can add to this trade. So now I'll go just outside an ATR, what do we say, 3.73, so 45.50 I can add to this trade. If I don't get stopped out. If I get stopped out, then I'm out of the trade. Then I'll just wait for another setup. See how that works? So I get out. Again, my two major reasons are opposing setups, meaning if this turns into a bearish setup, or major lugs. You could get out of some. I'm already going to be getting out of some if this liquidity fails, but you could get out of some if you get up to liquidity and it can't puncture through there and fails, you can get out of some. Right? I was going to get out of two right here, but I'll just I'll make him come back and try to stop me out there. So hopefully that makes sense. This didn't chase it. I still would have been filled, but I was not going to buy it up there. Let's see if this edge pulled back. So you can see if this pulls back and moves higher and this thing's below this yellow line, then I'll give it a shot. I'm not buying when this thing's elevated because I know what it does every single time. Doesn't mean it stops right at 75%. It could get up to, we've seen it almost at 100. I only saw that once, but it was at 90 the other day. You can see it. And you can pretty much go back and check this out for yourself to see what happened up here. Right here. Can I see my... This was 94%. Of course, it's off the screen. You can't see the time. So I post this. I try to post these in my room too, so you can go back and see the exact time of day. I can't see it. So this was yesterday at this is Eastern time. So it's just right around 2:50, 2:55. 1:55 Central. So let's just take a quick look to see what happened there, and then I'll hop off here, guys. One of the Tom guys' time. Yesterday at 1:55, let's see. Pull back. Or was it 12:55? Oh no, 1:55. So 1:55 is, that's 11:55 my time, right? So this is an example of pull back, and then it kept going. So this is what I'm kind of looking for now, right? So this was right around here. You can see it touched 40.22 and pulled all the way back down, over 10 points back down, right? This is almost 15-point move, 14-point move from there, where this was overbought. It's 11:55 my time, which was 1:55 Central. That's what I'm talking about, right? But then the thing pulled back, and then it resumed its up move. I just don't chase it when the thing is overbought like that. All right. Any questions before I hop off here?
Yeah, just very quickly. I think we've got some ES fanboys that you've upset. Pegasus has said, I would like to hear why Scott thinks ES sucks, and what do you recommend? He respects your opinion.
I just think, when it's moving around, it's great, but this is the most rotational whipsaw market you pretty much can trade, right? The markets I trade, you can watch the NASDAQ, Russell, soybeans, gas, crude, gold. Those are the ones I watch, right? And then I just look for my specific setups in those markets. There's no reason to pigeonhole yourself, because when you're just staring at one market, you're gonna start forcing trades. It's just human nature, right? Not many guys can sit here and watch one market all day long, not get to set up and say, "Oh well, golly gee willikers, today wasn't my day to trade," right? Most guys are like, "I got to pay my rent. I got to put on a trade here." If you're watching multiple markets, you see there's a potential setup in natural gas. I took the setup in soybeans. I took the setup in gold because I got what I wanted to see. right? This way, if you're watching multiple markets, you can be much more selective and wait for your exact sniper setup. Right? All right, so that edge is pulling back. Not gonna, still doesn't feel good to do this, but I'll buy it. As long as the edge isn't at 70% or higher there, I'll buy this. Then the next move up. So this is kind of like I said what happened yesterday. It pulled back. This didn't quite pull back 10 points, but it pulled back from the high there when that thing was at 72%. Pulled back from 52.50-ish, 52 quarter. Pulled back, almost 8 points. Right? That's why I don't chase market when the thing's overbought. So hopefully we come back up here. I'll give this a shot. The only reason I'm doing this, this is a long setup, but the reason I'm going to buy into spot gamma and a red lug is because this relative volume is extremely elevated, and I think it could blow right through that red lug. Otherwise, if we had just terrible volume here, it's already dissipating actually, but you did have prior bars. You had almost 3 times volume. Somebody big. This is what I'm talking about, guys. The rest of this afternoon is probably going to be a good trade. It looks like they're finally coming out to play. Remember I was saying, like I couldn't believe the day after a Fed. Now they're starting to play, right? So this is why I'll give this. Actually, that's not even the right market. Hold on. Sorry about that. It looks the same. That's why. That is soybeans, by the way, so that's good. In case you guys are long soybeans. Because you want to see the big volume coming in. That's what helps propel the market. Or else you're going to get algoed. That's what I was trying to show you guys. So I will take that trade. It still feels very uncomfortable because I know what happens at these areas, but that's okay. I'm going to give this a chance to blow through that red line. So if I get filled here, my stop is going to go. Let's see, TR is 7.45, so I'll go just outside that. So I'll just go 8 points below. So if I get filled on that, my stop is going to go at 35. Again, this is 18 points of risk, but the way what's based on the volatility, right? I know that if this is correct, this thing can go 30, 40 points. And we already know that that zone up here is near the 40-80 area. I think we can definitely get up there today. I think we will get up there today. Again, it doesn't matter what I think. I still let the volume tell me, but this is the next stop. All right, so this is worth risking 18 points because I think we can move at least 2 times that, maybe more. So I will trade that long as long as the edge isn't way overbought. It doesn't look like it will be by the time if it makes another move up there. I'm really glad I didn't take this long. That's who needs 200 points? Not me. That's about it. Long gold. We'll trade this setup in natural gas once we move out of here, and then let's see if I got stopped out of my beans or if I'm still in beans. Still in beans. So hoping this can hold, and then move up to. Oh, this is day. I'll add to this trade too if this can hold, as long as it doesn't get an ATR, and then I'm looking to try to get to this liquidity up here. I'm pretty sure that's what will happen. All right, guys. Hopefully you learned a little bit. Sorry, not a lot of trading, but that's a lesson for you as well, right? If you're patient and you just wait, you're watching multiple markets, you can just wait for your exact setups instead of forcing trades.
Yep, exactly. No, thank you, Scott. I think there was certainly some valuable lessons in there. Looking over your shoulder, hearing your thought process, it's extremely useful. Just kind of how selective you are. You almost took a trade there, but then you saw the TAS boxes. I think most traders are kind of doing the opposite. They're itching to get into the market, where you're kind of demonstrating, patience, discipline. Why play Queen 9 when you can wait for Ace King or whatever? It's
right. Exactly. That's exactly what it is. It's like playing a poker game, right? And it's just playing percentages as well. Taking your trades, knowing your areas, knowing where your stops are, so on and so forth. All right, that is it. I will see you guys. I do this every day, twice a day in my trade room as well. So if you like it, head over to the trade room.
Thank you. Yep.
See you guys next Thursday.
Thank you, Scott. Yep. Scott will be back next Thursday, same time. If you want, guys, you can jump over and see Tom now. He's streaming live on YouTube and in Discord. But that's it from Scott. See you next week.
Thank you. And by the way, I just got filled on that, and now here's a new setup. Now I can trail my stop based on this new setup. All right, so I'll draw this zone. I'll trade it 8 points below there, so now I can control my risk. You can see these things are going nuts as well. So there you go, filled on that, and now I can trail my stop based on this new setup, draw the zone, basically go down to, I'll stop this out at 40, what is it, 43-ish.
S&P stocks topped by ES 623 contracts.
Now you can trail, this is every time I go to get off, just quickly, I'm not going to draw this zone, but right now, there's your new setup, trail 8 points below here. Now it's basically, I'm risking total 8 points total instead of 18. I think this can go straight to 80, 75, 80. All right, guys, I will see you next Thursday. Thanks.
Thank you,